Good morning, everybody. It's Friday, September 6th, 9 a.m. Eastern. So we have the bulls holding on overnight. We just had the reaction to the jobs numbers, which helped the precious metals bounce, and it also helped the S&P 500 stay strong, at least initially. So we have a bit of a tightening 5-minute range to be watching. The most important supports for me after the bell rings are going to be 297.88 and 298. If those levels break, it shows us a short-term shift in momentum. But one thing that's good about the clarity of setups for today is that the hourly higher lows on the vast majority of individual names as I was running through the morning whiteboard are very clear. So that's our benchmark, and as long as the hourly higher lows hold, the bulls keep full control. And that was the scenario that I talked about in the video from last night, where we have daily candlesticks giving us upper wicks, but hourly time frames still looked very healthy. So those daily candlesticks being bearish reversal candlesticks, I don't look at them that way unless we lose the hourly uptrend. So there are some potential top fishing plays first thing this morning. If you do think that we are due for a pullback today, 298.83 is the SPY resistance from yesterday. If we do not break that level, a daily inside bar is pretty much going to form. Same thing for QQQ. 192.33 is the high of yesterday. We're not breaking that level yet. So for every individual name, the high of yesterday is the first key resistance level, and the hourly higher low from yesterday afternoon is the most important support level. Pulling up SPY on the daily. So again, at this point, SPY right now is about $4.30 from an all-time high, around that, and we are looking at a $16 move to have to break the August lows. And again, as I said in the video last night, that is now our benchmark level. If this market does not break August lows, there is absolutely nothing to be worried about as a bull. And that's looking bigger picture and longer term time frames. If the bears are going to prove absolutely anything to us, we have to break that level. And as long as we don't, the bulls will have confidence. So looking at the dollar today, dollar is still consolidating, trying to change the 4-hour trend. And we're going to have to see the bulls hold 98.09 and break 98.52 for a clear shift in momentum. And 98.54 and 98.52 is a little bit of a double top on the 4-hour time frame. And in the daily chart, we're looking for an indication that our daily higher low has been established. And we don't have that yet until we change the 4-hour trend. So gold had a significant bearish day yesterday, but this is a scenario where we have now lost the daily uptrend. I consider this a double top and then a loss of the higher low. And so far, we're not seeing any bear follow through. So we're going to have to see how the start of next week goes. But this is a potential scenario where we lose the daily uptrend and don't see bear follow through, which means healthy weekly consolidation. So still leaving the door open for that possibility, and keeping in mind that pretty much the FOMC is going to dictate whether gold and silver see healthy consolidation or whether it is more than that. So I was personally going to be looking for a bull entry into bull miners this morning, and that play has been ruined a bit, just because this bounce has already taken place now in reaction to the jobs numbers in extended hours. I set a bid pre-market at 35.80 just in case it was a bearish reaction initially and the hourly RSI was going to drop to the low 20s. But at this point, the bulls are showing up. There is a clear short-term resistance on NUGT, 38.78 to be watching first thing on the hourly chart. And if we don't break that level, that's a rejection from resistance. Silver is bouncing as well. We're looking for a daily higher low on silver, and we're seeing a significant bounce. Keep in mind that these precious metals, we are just looking for 4-hour lower highs to form, and this bounce isn't even really getting a whole lot of follow-through. For gold, I'd say anything under 1556 is a 4-hour lower high. And for silver, we did break one little resistance level, but again, just looking for this bounce to give us lower highs on the 4-hour time frame. Oil pulling back, so oil broke resistances yesterday and got way too extended with some RSI levels getting really overextended. And the bears knocking the price back down. So the most important level for me on oil is 52.82. The bulls are going to attempt a higher low compared to that level. And looking at RSIs, potentially interested in an oversold bounce. If oil were to drop down to a lower low under 54.90 and the hourly RSI were to get back to oversold, I would be interested in watching for the potential of a daily higher low to form. But between this range of this week, between 52.82 and 57.72, there's a lot of space there, and I would not be surprised to trade within this tightening range for most of next week. Natural gas. So natural gas is a daily inside bar. And still very healthy 4-hour consolidation. We have not lost that uptrend yet, and bulls are heading up to test 2463. So bulls still have complete control, and after 2463 is our key 250 resistance level. Every single day is a higher low on the daily time frame. 10 days in a row now, and if we do not break that pattern, we're not going to see a daily higher low form. So we'll see if we end up forming a daily inside bar. We would have to see a rejection from resistance this morning, but bottom line is the bulls are still very comfortable on all time frames aside from the weekly chart at this point. Bitcoin bulls got a break to higher highs today. Daily inside bar broke bullish at 10,666. And again, another name with just a higher low every day now, 8 days in a row. No daily consolidation. 10,953 resistance is being tested. And we're zooming out and watching the weekly key resistance of 12,320 if the bulls can get over 11,000. And the question that we have now over the next month is, are we going to see a tightening weekly range with an inability to break 12.3? Or can the bulls break that level and be looking back up to the high of 2019? So plays I'm watching today, going to be watching the MJ sector again, which has had a nice week, and watching for the potential of healthy consolidation as we are a little bit extended. And it also depends on what the S&P 500 does. If SPY loses its hourly uptrend and sees a bit of a pullback, then I wouldn't be surprised to see some profit taking in the MJ space as well. I do believe that the miners will have some solid volatility today due to the pre-market volatility in the metals from the jobs report. So I'll be watching that as well and keeping an eye on oil. Let's see if oil can give us, even if we don't drop to a lower low, there may be a bottom fishing play here. Watching the 15-minute time frame for clarity short term. Let's see if 54.90 is able to hold this morning, and then the bulls would have to break 55.60 to change the 15-minute trend. And if we're looking at UWT pre-market, the bottom fishing level is 1142 to be keeping an eye on. Just looking at individual tickers. JPM. So JPM had a significant breakout. The daily trend has changed. The financial sector saw what we needed to see for the S&P 500 bull move to be believable, and that was a daily trend change as well. Big upper wick on yesterday's candlestick, but we look at the hourly time frame, and this consolidation isn't giving me any major red flags. Obviously, the bulls would like to see less consolidation than this, and the potential for continuation would be greater if that were the case. The amount of range that we have on this hourly chart indicates that an equilibrium is the most likely scenario. So if the bulls can hold 111.68 this morning, I would expect a lower high compared to 113.72 and to see this hourly time frame tighten up. If we break 111.68 and the low of yesterday, 111.05, then we zoom out to the daily and we look for a daily higher low to try and form compared to 107.32. So the daily trend has changed. We zoom out to the weekly chart and definitely still cautious. So we're not in full-on bull mode until we no longer have the risk of this potential head and shoulders. And this is on the financial sector as a whole as well, where if we top out and can't break our recent high and then roll back over, it would require a bearish reaction to the FOMC, in my opinion, to see this happen, but that's entirely possible. So if we lose the daily uptrend on the financial sector or individual financial names, the odds of this being a right shoulder on a bearish reversal head and shoulders weekly pattern, the odds will increase significantly if we lose the daily uptrend. So the daily uptrend is going to be key over the next week and a half, and then the FOMC reaction is going to dictate significantly whether that right shoulder is a possibility or whether the bulls are just going to head over that double top at 117. So it will be a bit of a coin flip on that reaction to the FOMC. And it's pretty much the same setup on CVX, although we've gotten less of a bounce. At this point, I consider it our high, low of the pullback, double top, higher low is at 114.35. This is not a convincing move at all. These upper wicks are a red flag. To break resistance and see upper wicks and pullbacks each time, not ideal in any way, shape, or form. So this is definitely still a chart that the bears have control of. We have to see the bulls. Pretty much I need a close over 119 to break from this August range and show us a shift in momentum. Short-term support is 117.17 and then that low down in the 114s. but struggling on the daily chart, where the vast majority of individual names have broken their August range bullish now. And CVX is still definitely within that range. Our OKU daily inside bar yesterday. Hourly time frame setting up as the potential equilibrium. High of yesterday, low of the fast pullback. Lower high, pre-market potentially being set. If we cannot break 169.79 this morning, that's our lower high, and then we'll look to pull back and form a higher low compared to 160.28. So your options as a bear are entering and using 170 as a stop level, entering and using 173.20 as a stop level, or waiting for an equilibrium on the hourly to potentially play out and then playing that break, which would be the more conservative route. Baba, nice bull break over 178.80, and clearing 180 is key. And I think 180 is a level that keeps coming into play on Baba. Either way, getting over 180 is the goal, and the bulls want to close over that level. Because after 180, looking at the weekly time frame, 180.24, but after that, there is a lack of resistance nearby. As far as the daily chart goes, little bit extended, so I personally would not be making an entry on a break of 180, but bulls already in positions definitely would breathe a bit of a sigh of relief by getting over that level. And the hourly higher low to try and keep the bulls in full control from yesterday afternoon, 177.92 is the most important short-term support. If we cannot break 180 and we lose the hourly uptrend, it's pretty much a rejection from all these multiple tops. ULTA. So trying to get the oversold bounce going after the dump. The hourly trend has changed at the end of yesterday. So if we can break 237.85, we're looking up at 239.86 as the next level. We still have the pattern of a lower high every day. So the bulls want to break that first thing and try and get some bounce follow through. And if we do take out the high of yesterday and the high of the day before Wednesday, then we shift our focus to before the gap fill, 254.50 as a key resistance level. The most important support is the hourly higher low because our daily lower high will be set when we lose the hourly uptrend. So 233.05 is the most important support level for me. ZYNE, big day for the bulls yesterday. Hourly higher low is 11.07. Little daily trend change. And now 12.51 is the most important resistance because we have a weekly trend change as well if we can get over that level. Keeping in mind that we're looking for this to be healthy monthly consolidation, and so far so good on this back test and hold of exponential moving averages. First bull cross of these exponential 12 and 26 period on the long-term monthly time frame, trying to follow through for the first time ever, and just need to see this weekly trend change to have some renewed confidence. 12.51 is the level. So work. Lots of volatility in work recently. Bulls bought that gap down open in a big way yesterday. We haven't set an hourly higher low on the move from 26 to 31. So that's almost a 20% move with no consolidation. So we're looking at an hourly higher low needing to form. 29.51 is short-term support. If we break 29.51, I would actually almost be looking at this as a 4-hour equilibrium. High, low. Let's actually see on the hourly. High and low on the same candle. Held support. Lower high. So it's not your textbook tightening range, but if we pull back this morning, it'll be a more clear 4-hour equilibrium. Let's see what the 2-hour chart. So pretty much if we pull back this morning under 29.51, we're going to be looking for a higher low to form in the upper 20s compared to 26. And we'll look for this tightening range to play out into next week. That was actually the 2, yep. BYND, so still pulling back. And again, we're cautious of the head and shoulders on the daily time frame. 155.20 support is going to be tested first thing. If we lose 155.20, we look to 150.30 as the next level. We still have the daily uptrend, but this weekly shoulder, we have to be cautious because if we lose this daily uptrend, then that right shoulder is going to be very likely to form. Anything above 146.10 is still a daily higher low, But at this point, this is more pullback than the bulls would like to see. Down $20 almost from the top of the bull move. So this is actually a gap down open coming, and we're testing the low of after hours yesterday. GE. So GE, that's a very nice bull move, breaking the lower highs. So we had a higher low, and rather than seeing the equilibrium, the market strength helped the bulls head right through resistance. Hourly time frame did shift momentum with this little lower high, a new low of the day yesterday. So I would say anything under 907 is an hourly lower high. And if we break 880 support, we look to 873, and then a lack of support after 873 just for clear levels. We will be looking for a daily higher low to form compared to 808. Keeping in mind that the weekly chart may be setting our lower high. Hourly RSI, if it were to get oversold, we're not even close to it, but that's when we'd be looking for the potential of a daily higher low to form. So first things first is, can the low of yesterday hold? And if it breaks, daily consolidation underway to form that, or to try and form that higher low, which we will expect to happen as the bulls have a lot of space to work with from this move. CRWD, key short-term resistance is 89.35. So we're seeing a gap down open. So 78.89 is the most important support. And our new daily lower high was set at 87.77. So anything under 87.77 keeps the daily lower high pattern intact. And now the bulls are just trying to hold their support of 78.89. If bulls bounce and follow through this morning, we're certainly going to be looking for a lower high compared to 91.50 and an equilibrium in reaction to what I assume is earnings. But not a whole lot of volume or liquidity pre-market and after hours to be giving us a good picture just yet. But one thing is for sure, 78.89 is the most important daily support level. Twitter breaking out in a big way. So the Twitter bulls were set up, and they were set up really well for if SPY could break its August range, which obviously happened. And that is big time follow through, confirming the weekly bull flag. So now we zoom out, and the next resistance is up at 45, make that 46 psychological, and then 47.79 is the level to be watching. Hourly time frame is definitely a bit extended, so I'd be cautious if we break the low of extended hours of 45.10. That means we need to form an hourly higher low, which we will anticipate to be healthy, at least initially. If we see a bull break of 45.33 first thing, then the bulls are going to hold off on that hourly consolidation, at least to start. But I wouldn't be surprised to see hourly consolidation today after the significant two-day bull move. So TLT, I don't use fibs, but what stands out to me on TLT is 143.43 being the most important support level, because if that level breaks, then weekly consolidation, well, it already is underway, losing the pattern of a higher low every weekly candlestick. But there's definitely enough justification to be looking for weekly consolidation and using the little double top as a potential top fishing play in the upper 148s. Keeping in mind that we are just looking for a weekly higher low to form, the bulls have tons of space to work with, and there is still potential at this point that it is a weekly bull flag. So the bears would want to see a pullback down towards 140 to negate the possibility of a bull flag, but it's going to take multiple weeks to lose the weekly uptrend. Pretty much it would take a couple weeks of a pullback to look for our higher low if we keep pulling back. Then we would look for a failed bounce attempt to break the recent highs and then roll over to lose the weekly uptrend. But that's a long way away from happening, one step at a time. And so far, 143.43 is the most important short-term support level. If that holds, the weekly bull flag is a likely scenario. DOCU. So DOCU, this bounce attempt, again, is the kind where we change the daily trend and don't get any convincing bull volume or strong candlesticks or follow through. So we zoom out to the weekly, and we're absolutely cautious of a weekly bear flag. So as of right now, short-term support is 45.50. Never mind. Big gap up open. So that negates the bear flag on the weekly. Key weekly resistance is going to be up at 54.78. So 54.78 is breaking. So we're breaking the weekly lower highs, which is obviously a great sign for the bulls. Let's see what the monthly is shaping up. Equilibrium. Very good looking one. All-time high, all-time low, lower high, higher low is now very clearly set. And we're looking at 59.62. Anything under 59.62 is a monthly lower high staying in this equilibrium. That is the level of resistance longer term. As far as short-term action today, support levels are 56.12 and 55. Best case scenario for the bulls is to hold 55 to set an hourly higher low and stay in full control. And 58 is the high of pre-market, with 59.62 the most important long-term level after that. So Facebook, if bearish, definitely want to see a rejection from the high of yesterday, 191.36, and want to see a break of hourly consolidation from yesterday afternoon, 189.44. Then we look to the low of yesterday if that does take place. So inability to break the high of yesterday means best case for the bulls will be a daily inside bar, keeping in mind that anything on the daily above 182.11 is just a higher low, and we now have exponential as support as it was resistance for almost 6 weeks, 8 weeks. And the bulls would be looking to back test and try and hold that for the daily higher low. But short term, it's all about yesterday's range, and if the bears can break 189.44 this morning, they'll have a little bit of momentum in their favor. And obviously any weakness in the S&P 500 would only help the Facebook bears. Thoughts on the jobs report? Honestly, I don't care about the jobs numbers at all. And I know for fundamental traders, it's really hard to understand what that means. But I view this market as a completely different thing than anything fundamental about the economy. And that helps me stay completely unbiased by all these fear articles. All I care about is the price right now of the S&P 500, the key resistance, and the key support. That is all I care about. The jobs number could be 4 or it could be 10 billion. I don't care in the slightest. So it's hard for me to explain, and to people that have relied on fundamental analysis for so long, it's just, I'm aware of it, and I'm aware of the things that impact the market short term. Obviously, I know SPY is going to react to the jobs number short term, but all I care about is the levels that SPY hits on the reaction. I don't care about what the jobs numbers are. So again, if the bears are going to prove anything, and if any of this recession and fundamental bearish talk that we've been seeing, if it's going to mean anything, we'll see it in the charts. It's not going to, sneak by us. And if we don't break the August lows, it means absolutely nothing to me. I have no doubt that the powers that be that run this market and run this economy, whether it's the presidency or whether it's the Fed or whoever you want to point to, I have no doubt that they can easily keep this market irrationally strong. I mean, like I said recently, I just watched The Big Short again, and they were right on all of their bearish fundamental analysis, but in the short term, they got killed by being too early and by the market being able to prop up far longer. Again, it's that saying, the market can stay irrational longer than you can stay solvent. And there was an example of that where, even as things were starting to fall apart, the market still continued to hold strong. So again, we'll see it on the charts when there is significant weakness. We're in weekly uptrends, we're in monthly uptrends. Give me a monthly downtrend in the S&P 500 and I'll be the biggest bear there is. But until that happens, I'm a bull. EA. Weekly time frame, 103.59 key resistance. A little bit choppy on the weekly chart. Bull break into a bear break. So I don't really like that weekly chart much. As far as the daily chart goes, anything above 92.65 is a higher low. Hourly chart will be in a downtrend. If we break the low of yesterday, it'll be a little hourly, lower high and lower low. So if we break that low yesterday, daily consolidation is underway. So goal for the bulls this morning would be to hold that low but I would be expecting an hourly lower high compared to 99.48 due to the size of the pullback from the high of the day yesterday. Well, I guess you're looking at weekly. So weekly, I don't like it. So that means zoom out. Let's see if we can see clarity on the monthly. Even then, it's a little choppy. Clear resistances, 103.59. The bulls have to break that level to start to prove anything. And the most important weekly support is down at 86.24. But personally, I look at this chart and I move on to another name, because there are charts out there that have weekly very clear levels, very clear uptrends or downtrends, and this is just not one of them. RAD. Weekly chart still in a downtrend. The bulls have to break 749 to break the lower high pattern. If we can't break 749, it's just a lower high. And then the bulls will have to hold the low of 504 to try and set a little higher low and then break resistance. Weekly exponential resistance, we've closed over it a few times, but obviously seeing no follow through. It's definitely worth, this is the kind of pattern that shows me the bears, it's not a, you couldn't really draw a perfect falling wedge, but it shows me the bears are running out of momentum. That looks like they're getting a bit exhausted, so it is worth watching for a longer term shift. But if we can't break 749, then that shift is not happening yet. It's the same thing as the natural gas chart and why we've been interested in it, even though it's been showing so much weakness. We just saw bearish exhaustion in the longer term downtrend, which is similar to this chart. MA. So blue sky breakout, bulls in complete control. Hourly higher low is very clear from yesterday. So 290.47 to keep the bulls in full control. If we can't break the high of yesterday and we lose that level, then we zoom out and look for a daily consolidation to potentially be underway. Certainly we will look for a daily higher low to form. When we see that daily, we see that amount of space the bulls have. It's just a question of whether the hourly uptrend can hold today or not. And that's the way that we're looking at the vast majority of individual names this morning. Can the hourly consolidation from yesterday hold and keep the bulls in full control? If not, it may be time to look for a daily higher low to form. So copper on the weekly time frame is coming from a lower low. So I'm sure there's going to be traders out there looking for it to be a laggard play to the other precious metals. But there is no sign of strength right now. Step number one is break 264. Otherwise, it's just a weekly lower high. Let's look long term. So breaking 264 would break the weekly lower high pattern. That would be a good start for the bulls. We still don't have a daily trend change. This move is coming off of the low, and we need a clear daily lower high and lower low, or higher low and higher high, excuse me. So we need the clear daily higher low and higher high to get follow through. And if we are unable to break 264, we will look for that daily higher low to form. And again, ideally, the bulls, if they're going to stay strong, want to keep the daily exponential moving averages as support on a back test. But a daily inside bar setting up today with key resistance being tested, key short-term resistance on that weekly time frame. So Amazon, the most important thing is the hourly support from yesterday. So the hourly higher low is 18.29. And after 18.29, we would then look at the low of yesterday. So 18.29 is the most important support first thing. High of yesterday, 18.42 is going to be tested right out of the gate. So again, another name that's setting up for the potential of a top fishing play. If we do see some pullback once this bell rings, Amazon will reject right from its high of the day if that is the case. So there are potential top fishing plays out there first thing. And we'll see if SPY bulls are able to break 298.83, because if not, those top fishing plays may play out. Nice gap up open on CGC, some solid follow through there. LABS. So LABS was a daily inside bar yesterday. 515 and 518 are resistance levels. And 497 is support. If we lose 497, daily higher low has to form. So we'll see how that daily inside bar breaks first thing. The point of the IWM talk in yesterday's video was looking at the hourly trend to give more information than just the daily candlestick shape. So if SPY breaks these lows here of these wicks down in the upper 297s, those top fishing plays have potential to play out. And so far, a very quick double top on Amazon with the high of yesterday and a $5 pullback. Let's see if these top fishing plays play out this morning. If the SPY bulls hold those lows and can break 298.55 from pre-market, they'll be back in control of the short-term time frame. But right now we have a 5-minute tightening range from pre-market volatility. And the major tech names are all one by one going red on my screen. But the sector as a whole is still holding on slightly green. LRCX. So the difference between LRCX is the size of the hourly pullback. We are looking for an hourly equilibrium. I would expect a lower high compared to 232.26 this morning. And the most important support is 225.54. So if we can't break the high of yesterday this morning and then we break that 225.54 level, we change the hourly trend with the lower high and lower low. Checking back in on oil. So that oil bottom fishing play, trying to play out at this point. 54.90 was support. We held 54.96. We'll see if that gets any follow through. KO big red candle to start the morning. Daily time frame already breaking the low of yesterday. So daily consolidation very clearly underway. And actually, I take that back. It's a double bottom with the low of yesterday at the moment. If we break 55, we break the low of yesterday convincingly. And we'll look for a daily higher low compared to 53.38. Or 53.39. So we're now clearly in an hourly downtrend. And we already were yesterday. We're just following through with it. And we'll see if we get hourly oversold conditions to be looking for that daily higher low to potentially form. So Amazon at this point with a very nice pullback, rejecting from the high of yesterday. And we can separate individual names where the names that broke their low or that broke their high of yesterday versus names that rejected from their high of yesterday. Big difference between the two. So SPY heading down to test our pre-market supports in the upper 297s. Again, would not be surprised to see some consolidation today heading into the weekend. But what I care about the most on SPY is the hourly higher low from yesterday during trading, 297.41. Because as far as I'm concerned, we're still in an hourly uptrend if that level holds. So bears may need to be quick with their top fishing plays. So Platinum's pulling back and looking for a daily higher low to form. We need a 4-hour trend change to be confident the daily higher low has been established. With this bounce, just like gold and silver, we're only looking for a 4-hour lower high. Anything under 997 is a 4-hour lower high. So it's a great bounce this morning, but it's going to take a while. It's probably going to take into next week to see, can this 4-hour trend change, or is it just a lower high forming? So we will anticipate a daily higher low is going to form. We'll just have to wait to see if this 4-hour trend can change before we can determine that it was this low. But obviously a very solid bounce from the low of pre-market first thing this morning. We don't even have an hourly trend change yet. SPY bears, a bit more follow through. We'll get back to tickers in just a second. I'm watching the C-Web hourly equilibrium, and I will exit if it breaks bear. So SPY Bears getting that follow through, perfect top fishing play to start the morning on a lot of individual names. So Amazon was a good top fish play. Facebook broke that support. We're looking at the low of yesterday now, 187.94 on Facebook. Netflix was a great top fishing play. High of yesterday, 293.97. High of today rejected by 60 cents. QQQ rejected from the high of yesterday by 23 cents. And SPY rejected from the high of yesterday by about 50 cents. So C-Web with the hourly bear break. So we now have a daily tightening range. The most important daily support is 21.59. And I've exited that smaller position. So great start for the SPY Bears. 5-minute oversold. Heading to hourly support. 297.41 approaching. And again, for every individual name, that hourly support is the most important. Bull miners are off to a great start, getting follow through from their strength pre-market. CGC gap up for selling at least initially, not seeing a major sell-off. It was a quick little flush. And if we do get any bounce follow through, I would expect a 5-minute equilibrium this morning. If the bulls can make their way up over 26.55, I'd be looking for a 5-minute equilibrium. But again, I mean, we consistently in the MJ space have seen that every morning with this little gap up open that we've been seeing, it's a gap up for selling, at least initially. BZUN. So BZUN high of yesterday, 47.38. We only broke it by 5 pennies, so not very convincing just yet. If we see a new low of the day, that's a red flag. Pretty much if we break 47, I would call the daily chart a double top the last 2 days. If the bulls can hold 47, they're staying within striking distance to try and get a more convincing break. After 47.43, it's 47.50 and then a little bit of a gap fill on the daily time frame. HCAT. So HCAT is on the verge of all-time lows. 36.93 and 36.29 are the only support levels left, and we're testing 36.93 first thing. Anything on the hourly chart under 38.10 is just a lower high, so the bears are still in full control at this point. So SPY Bulls still holding that hourly support level initially. Tech sector is slightly weaker than the financial sector. So Twitter's getting that hourly consolidation. No red flags at this point. High of yesterday, perfect top fishing. We rejected by 3 pennies from the high of yesterday. And now we're looking for an hourly higher low to form. Amazon, perfect top fishing play. Broke the hourly support from yesterday, 18.29. And a daily inside bar is very likely for Amazon today. PIR. Bull move to start the morning, but giving it all back and hitting a new low of the day. Certainly a red flag. Short-term support. Most important level for me is 468, but very high risk, high reward with that kind of volatility. 3% in one candlestick. SPY bears still in control. 5-minute RSI still oversold. CGC is holding on very well. That's a very nice bounce. Again, watching for the 5-minute equilibrium. Looking for a lower high compared to... I'd be watching the pre-market level of 26.94 as a key short-term resistance. But bulls are pretty much seeing best case scenario on the size of the bounce from the initial profit taking. SEDG. So SEDG on the daily time frame is testing its support of 77.44, and we actually broke it by a little bit. So the bears are definitely in control. Next level is 76.20. But if the bulls can see a solid recovery and try and close green or as close to green as possible, there is this scenario of the potential of a weekly bull flag where we lose daily support and don't see much follow through. And so far that's the case of the daily pattern over the last 4 weeks. So bulls need to show up here after that support break. CGC very convincing. V-shaped recovery, testing 27 psychological. And this is the time where NetHouse likely shows significant CIBC buying, because to see those V-shaped recoveries in a new high of the day and not see the equilibrium, there's usually a big influx in volume to see that happen. APHA is testing the high of the day, 690. And it's doing the same thing on the 5-minute time frame, V-shaped recovery. But it's still a double top high of yesterday, high of today that the bulls need a bit more follow through over. FSLR. So pulling back on the daily, the break of the low of yesterday tells us we have to form a higher low compared to 60.64 now. 64.83 and 64.48, key daily resistances, rejecting the price. And watching for the potential of hourly oversold conditions if we were to head down there. But the bulls must hold 60.64 on the daily time frame. Definitely a fake out candlestick yesterday. CCG is also pulling back, looking for a daily higher low. Anything above 830 would fit the bill. 884 is a short-term little double bottom with the low of today so far on the hourly chart. But looking for a daily higher low to form to try and keep this daily uptrend going. This is a bit of a red flag, just the fact that we changed the daily trend straight into consolidation. Breaking 905 yesterday was key, but we got no follow-through, so the bulls need a daily higher low and more follow-through into the mid-$9 range as soon as possible, because this weekly chart is a potential bear flag at this point if we do not get that follow-through. SPY is testing our hourly support. Still barely holding. And for the MJ sector to be hitting highs, speaking about APHA, CGC, ACB, for these major names to be hitting highs while SPY is 5-minute oversold and dumping the first 15 minutes of the day is again very notable. I see my C-Web order did not fill, so that's a mistake. I'm a bit overwhelmed with tickers this morning. I'm going to use 17 as a stop. on C-Web, and that's a disadvantage of OTC where I can't make it that automatic order that can fill while I'm talking and looking at other things. A bit overwhelmed this morning with tickers. Cureleaf having a great bounce. Held that low of yesterday, first thing by 3 pennies. LK. So LK daily higher low trying to form yesterday at 19.05. Not getting much follow through this morning. The most important daily resistance is 21.50. That's still a ways away. And if we break the low of the day here, that's a bit of a red flag. We don't have an hourly support level established above 19.05, so if we break a new low of the day, we'll look for that hourly higher low to try and form. Look at where SPY bounced. By 1 penny holding support. Let's see if we can get any follow through. 5-minute exponential resistance is being tested. We'll need a clear 5-minute trend change to believe that the bulls can hold that support. But an initial positive response to it first test. Five-minute oversold conditions right off hourly support to the penny. BBBY up at the high of the day. Hourly higher low is 9.97 to keep the bulls in full control, and 10.36, the high of yesterday, is our key resistance. If the bulls can break 10.36, we're looking up at 10.79 as the next level, and if we can't break 10.36, a daily inside bar is extremely likely. AMD, big flush first thing. Again, the daily chart. We're watching that 2-day time frame. And resistance actually broke by 20 cents or so, but no follow through. The most important support for me on the daily is 30.68. We're seeing a 5-minute bounce in line with what SPY is trying to do. Look at SPY. I mean, that is just such a perfect algo reaction to hitting key support. I don't know if there's news now on this most recent little spike, but if you are a bull, that is best case on what you want to see testing hourly support. We'll still need a 5-minute trend change and a new high of the day for it to really follow through, but so far so good. So AMD still rejecting from 5-minute exponential resistance. So the bear's still in control. And I would say that is a bearish correlation. For it to see that kind of bounce while SPY is seeing a much more significant bounce, I would call that a bit of a bearish correlation with SPY, just to be cautious of. CRWD bouncing from the low, decent little bounce. Anything under the high of the day is just a 5-minute lower high. If we don't break the high of the day, the 5-minute equilibrium is the most likely scenario. So gap down, open, bounce attempt. And it's all about 81.50 resistance. AUSA. Daily inside bars so far have to break 107 resistance. Watching the pattern of a higher low every day still intact. If we don't break 107, daily inside bar extremely likely. Resistance after 107 is 110. So CGC definitely big buying. definite momentum shift. We saw the volume days ago, and when's the last time we've seen a V-shaped recovery to a new high of the day on CGC like this? It only happens in bullish environments. Certainly the most notable MJ shift over this week that we've seen in a long time. CLDR. CLDR, continuation on the daily time frame, getting over the high of yesterday is a good sign for the bulls. 925 is resistance after the high of today. Bulls are looking for a 5-minute higher low to form. The sooner the better. And the hourly higher low, looking at 820. Bulls need to hold 820 to keep the hourly uptrend intact. So C-Web not filling my order was definitely a beneficial mistake, but it's a mistake nonetheless, and it's not a good thing. Again, it's a disadvantage of the OTC. And I could very easily have a bigger loss than I wanted to see if it went the other way. Kron is on fire. So, yep, MJ Bulls are back. September 1st. Facebook Bears looking good. That break of the low yesterday was great. Hourly RSI is not oversold yet. Next support is 186.61. And the Bears are loving the fact that Facebook Bulls are not seeing any bounce on this SPY bounce. But 5-minute RSI for Facebook means we should anticipate a short-term 5-minute bounce in the near term. So RLKU, we were watching that hourly chart. And we did break 169.45, but that's still a double top potentially. And then we have the high of extended hours yesterday as the next resistance. A little bit cautious of this APHA 5-minute bear volume. So cautious on APHA here. If we see a new low of the day, that would definitely be a red flag. There is some quick profit taking going on around the sector. Just seeing Kron pulling back 2% very quickly from the high of the day. So Apple's pretty choppy on the 5-minute time frame. We did break the high of yesterday first thing, but straight into consolidation. The hourly higher low to keep the bulls in full control is 211.51. So the hourly uptrend is still intact. SPY trying to make its way back to the high of the day. That would obviously help if the SPY bulls can hold their hourly support by a penny and break to a higher high. Natural gas, I am not going to enter natural gas if we do not see a daily higher low before 250. There's plenty of other stuff for me to be trading right now rather than trying to chase an overextended daily chart. But the bulls are definitely still strong, and 250 is on the horizon early next week. We'll see if the bulls can follow through with it. But I've only got so much brain power. And MJ is giving a very nice week. So that's where my focus is at the moment. ACB, really nice start. So daily time frame, the next resistance on ACB, the most important resistance is 620. The most important short-term resistance. And the hourly uptrend still very much intact. Anything above 573 was a higher low. The low of today is 580. So hourly uptrend intact and heading up to key daily resistance as the shift in the MJ sector continues. SLV, little 5-minute higher low pattern. Have to be cautious if we lose that. If we lose the 5-minute higher low pattern without breaking short-term resistance 1763, it's a bit of a red flag. So the low of the day must hold. If we lose it, zoom out to the hourly, and an hourly higher low will have to form. So Netflix losing its hourly support after the double top at the high of yesterday. But I would expect the low of yesterday to hold 282.50. So a daily inside bar is very likely on Netflix. And bears can still get followed through. If SPY can't break the high of the day, we're setting up for the potential of a SPY 5-minute equilibrium. So if SPY loses this hourly double bottom, bears will get some solid follow-through, and that is still on the table. Watching how this 5-minute tightening range on SPY breaks over the next hour, within the next hour, will probably dictate momentum for the day. PLTH inching higher over the high of the last couple of days. Short-term resistance is 265 and then 274. Not a clear daily trend change with how this chart looks. But as far as the hourly higher low pattern, that's nice and clear. So 253 is the most important hourly support. And bulls need volume. Very low volume. Bulls want to see more than 150,000 shares traded today. So Netflix, really nice 5-minute bear flag. But again, there's just so much space that the bulls have before that low of yesterday. There is a lack of clear support levels down there, but we are definitely going to be anticipating the bulls will likely hold that low of yesterday. Anything under 291.33 is just a 5-minute lower high. Best case scenario is SPY breaking the low of the day and the double bottom. IIPR, any progress in the States Act, if the States Act passes Congress and Senate and Trump signs it, it will be the holy grail of USMJ catalysts short term. It will also be negative for IIPR. IIPR's business model is giving companies strapped for cash in return for real estate assets. If these companies now have exposure to work with banks in much more favorable conditions, IIPR's business model is hurt. So this bill is likely to pass Congress. Senate is the hurdle, and then Trump has said he would sign something similar to it. So it's still got a long way to go, but that is a potential looming bearish catalyst that would be bullish for everybody else in the sector. I'm doing a USMJ, intro to USMJ presentation at my house here this Sunday with a PowerPoint and a projector, and I will record it and upload it for people. So CGC at the high of the day, completely disregarding what SPY is doing. Bulls like it. Netflix and Facebook bears running away with it at the moment. And SPY tightening 5-minute range to be watching short term. So, catching my breath. Watching for the potential of the miners to lose the 5-minute uptrend, the bull miners, which may indicate a temporary top being set. Let's see if that oil bottom fish played out. It played out. Nope. We actually broke to a lower low by 9 pennies with no bear follow through. So let's see if the 15-minute time frame gives us a falling wedge scenario. GBTC. So daily time frame for GBTC, still clear lower highs. Anything under 1380 is a lower high for me. And it's interesting because Bitcoin has broken its lower highs. High of August 23rd. So we're well over the high of August 23rd. Bitcoin was 10,500 at the high, and we're 3% over that right now, but GBTC is lower. So that tells us the premium fading has been keeping the price contained a bit. That's an interesting note. We're currently 4 to 5% below that level that Bitcoin is 3% above. TLRY will need a clear higher low and higher high, but obviously the shift in this momentum gives the bulls plenty of space to work for a daily higher low. ACB has been getting calls bought all week. This is the second alert I've gotten. The first alert came before that huge volume surge in the sector at 2 p.m. Eastern a few days ago. They have earnings approaching, so people are definitely making bullish bets on their earnings. VFF up at the high of the day, approaching key short-term resistance. High of yesterday is 1180. BMMJ breaking the daily falling wedge. Next resistance level is 785. But looking at the weekly time frame, anything, we're just going to form a weekly lower high. I mean, the last one was forever ago. We don't have a clear daily trend change yet, so whenever this move tops out, we will have to see a higher low and higher high follow through. Hourly support is 66. ABEO, nice V-shaped recovery to a new high of the day. Hourly tight equilibrium. 305 is the most important short-term resistance for me, 302 and 305. And the most important support is 287 and 281. And a break is definitely imminent there. If not today, certainly Monday. The VIX is a potential hourly bear flag. There's not much to the pull, meaning the most recent leg down wasn't a very clear, distinct drop-off. But I would say anything under 1630 keeps the bears in control. Fly on the wall is a service through Fidelity. I don't know if it's Fidelity itself or a third party. So key short-term resistance on SPY, 298.25, and now we're looking for a higher low compared to the low of the day for this 5-minute equilibrium to tighten up. SLV. Most important resistance on silver, 1758 and 1759 is a little double top, so if adding to any shorts, I would only be top fishing that level. It's a really tight 5-minute equilibrium right now, although actually it's a little higher low, so it's a clear 5-minute uptrend still favoring the bulls. A break of 1751 would start to shift momentum back towards the bears on the 5-minute time frame. But at this point, I would pretty much just be looking at 17... Really, if I'm going to be top fishing, it'll be 1763 as the most important resistance. If bulls are able to break that level, then they have some decent follow-through on their bounce. And I get that level by looking at the 15-minute time frame, and that's the high of any bounce attempt that we saw yesterday. We hit 1763, 1758. So it's a clear little resistance zone. Definitely some red flags on APHA. Tiring out a little bit before other names are. It ran harder than them, than other names, and the other names are catching up a bit. I do have a stop loss in place on APHA once I saw that 5-minute bear volume. But APHA is a nice 5-minute equilibrium. Nice sign for VFF. So VFF weekly higher low, very, very likely set. MNK 5-minute higher low, short-term support is 173. This is just a daily oversold bounce. This stock has something very wrong with it. There's a gap all the way up to 242. But I would definitely want to know what's going on fundamentally with this stock in order for it to drop 90% in a few months. Bitcoin, we're watching the pattern of a higher low every single day. So this move has come off the low, and we have not seen a daily trend change, but the bulls are still in complete control. We've now seen a higher low 8 days in a row. 10,953 is resistance. And if we break that level, we then zoom out to the weekly and we watch for clues. Are we just going to form a weekly lower high compared to 12,300 and tighten? Or do the bulls have significant follow through to try and break this weekly tightening range? If you show me this chart and you tell me it's any regular old stock, I would be looking for a weekly lower high to form compared to 12,320 and for a weekly tightening range through September. But we certainly know Bitcoin can get wild. MCD, really strong weekly chart. Short-term daily resistance right up at 221. That's a bit of a triple top. After 221 is the all-time high. As long as the bulls hold 216.28, they have the daily uptrend in their favor. But if we lose that daily uptrend without breaking to a new all-time high, it's a pretty clear triple, quadruple top that would be a little bit concerning for bulls. ATVI, very clear shift in momentum on the weekly. At this point, ideally, if you're looking for consolidation, today looks like a daily inside bar, so you want to see that break bearish next week, Monday. Anything above 50.17 is a daily higher low, so there's a lot of space for that to form. So I would say 53s or 52s if we can break this daily inside bar bearish. SPY Bull still holding on. I wouldn't really be looking for APHA entry on 5-minute oversold. After such a strong run, if we were to get to 5-minute oversold conditions on a Friday heading into the weekend, I'm not sure there's going to be a bunch of dip buyers there. Also, if APHA is the only one in the sector getting to 5-minute oversold, that in itself would be a bit of a red flag. I'd be more comfortable if everybody in the sector was getting 5-minute oversold for the first time after a solid bull move. But it's very correlated to SPY's 5-minute equilibrium, and that may dictate which direction we break. So bull miners did lose their momentum by losing the 5-minute uptrend. So temporary top is set, and we're now going to look for an hourly higher low compared to the low of pre-market on those miners. LSPD.to. Looks like a weekly equilibrium to me, which means looking for a higher low compared to 36.16. And that's the kind of pattern where the 2-day chart is the most clear for me. So potential bottom fishing play off of 36.16. Bulls need to change the hourly trend to have any confidence in that support level holding, and we've been rejecting from hourly exponential 12-period resistance for 4 days now. So that's a nice visual guide as well. Too high above that support level right now for me to just look for an entry and play off of it. I would only want to enter in the lower 37s if I were going to be bottom fishing that support level. Otherwise, I would want to wait for a bit of a more clear shift on the hourly time frame to give me confidence that that daily higher low is being set. So Powell speaks at 12:30 p.m., 2 hours and 15 minutes from now. Certainly potential to have a short-term impact on SPY. It all depends on what the chart looks like heading into that. SPY right now is clearly struggling at 298.25. But the next 2 hours is going to dictate what we could expect for Powell. If we're on the verge of the high of yesterday, it's going to be a much different setup than if we have already lost the hourly double bottom on the hourly higher low. So I would say start paying attention at noon as to where we stand heading into Powell speaking. NKE, 5-minute bull flag trying to confirm short-term support is 88.64. But we do have a double top at the high of the day, so that's an inability to confirm the 5-minute bull flag first thing. We definitely need a clear new high of the day. And then 89.87 is the most important daily resistance from there. We're definitely overextended on the daily chart, so just a bit cautious in that regard. But as far as short-term action goes, we have a double top, and the most important support is 88.64. HOME. All bulls to start the day. Very strong 5-minute move from the open. Big gap down buying yesterday, getting big follow through today. 7:30. Key short-term resistance stands out. And then pretty much 8 psychological after 7:30. Hourly time frame, our higher low is the low of today, 645. Actually 643 from yesterday, but same difference. 7:30 and then 7:50 was an extended hours level. And we will need a clear 5-minute higher low at some point this morning, as we've been riding the 5-minute exponential supports since the open. But bulls really comfortable. It's just a question of whether we can break 7:30 today or not. NIO. So NIO is just a daily downtrend. We rejected from $3, double top, high of yesterday, high of today. Has the hourly uptrend been lost? You could say it has. So on any bounce, I'd be looking for an hourly lower high compared to $3. Pretty much daily inside bar is likely to form today. And we will need a clear daily trend change with a higher low and higher high to see this momentum shift with follow through. So most important short-term support aside from low of the day is the low of yesterday, 280, as the bulls hope for a daily inside bar after the double top rejection. Netflix and Facebook bears still in complete control, and that's without any help from SPY. Again, that will only help bears if SPY breaks its low of the day. There's no clear support on Netflix aside from the low of yesterday, which is still multiple percent away, or maybe just 1.8% or something along those lines. One level you could pick out on the 15-minute time frame from yesterday is 286.53. So very notable number of member tickers this morning, especially for a Friday. This is probably the busiest day as far as tickers are concerned in many weeks, if not months. So wondering if that's just yesterday's big bull move, waking people up to get interested again, or I don't know what. VGW, to change the daily trend, we have to break 356. Our daily higher low is set at 314. So 314 to 356 is the most important daily range. CGC, new high of the day. Again, this is reminding us of strength of old that we have not seen in a very long time. Five-minute higher low on CGC is 27.25. LK saved that low of the day and hit a new high of the day, so that's obviously best case for the bulls. All about 2150 on the daily chart. AXU, high of the day test. Most important support is 242. So if we can't break the high of the day, and if we break 242, it will show the bears gaining some momentum. We're going to be cautious of the daily head and shoulders pattern. Our daily high or low is 230. If we set an inside bar today, which looks pretty likely, we have to be cautious of this scenario next week, where we bounce, can't break 281, and then roll over and break 234 and 230 support. So that's looking into next week as a possibility, but just something to be aware of. SPY bulls still staying in the game after that hourly support hold. So APHA trying to follow SPY, trying to get to its high of the day test. CGC resistance, we're looking at 28 psychological. And then 2830. CGC $400,000 ask just eaten up real quick. Still buying pressure there for sure. I added CGC to my girlfriend's account in the 24s, and I'm just setting a good till canceled break-even stop loss on that position and letting it ride as long as possible. So SPY testing the high of the day. If we break the high of the day on SPY, it's a very successful hold of hourly support. And then all eyes will be on the high of yesterday, 298.83. But we still got to break that high today first. Tesla on the daily is a daily inside bar, pretty likely to form today. That high of yesterday is 229.80. We're $3 below the high of yesterday. We're well above the low of yesterday. So expecting the range to stay fairly tight from here on out. And today's low is looking to be the hourly higher low. No indication aside from the V-shaped recovery on CGC. As soon as CGC hit a new low of the day, we can say, okay, that is not the most likely scenario, and it obviously favors the bulls significantly. I'd say, especially in the MJ sector, 9 times out of 10, in the last 4 months on CGC, 10 times out of 10, you're going to be looking at the first 10 minutes to dictate best case being a 5-minute equilibrium. In a bullish environment, we can easily see a new high of the day on that bounce. We just have not been in a bullish environment, so it has not been happening. But I distinctly remember that V-shaped bounce, a new high of the day, being very common in previous cycles of this sector. So, long story short, was there any clear indication of MJ's strength in spite of SPY weakness today? No, just the clear sentiment shift going on in the sector all week. Nat gas key resistance test 2462. Highest price we've seen on this move, and we just got up to 2455, so coming close. SPY still right at the high of the day. XLF, the financial sector, is a bit stronger than the tech sector this morning. So SPY bull break, new high of the day. We shift our focus to the high of yesterday. ULTA. V-shaped recovery. Would not be surprised to see an initial rejection from the high of the day. If we pull back any meaningful level, we'll be looking at the 5-minute equilibrium. So I'd say if we pull back down under 236, the 5-minute equilibrium will be the setup. It can also be a 5-minute cup and handle if we get a 5-minute bull flag here. I don't trade VIX much at all. If I do, it'll be TVIX or UVXY, both fairly comparable. But that's very rare. Nat gas still testing resistance. It only broke it by 1/10 of a penny. Definitely want to see a more convincing follow-through move. So at this point, with how the morning has shaped up, if we cannot break the high of yesterday on SPY, pretty much a daily inside bar is a guarantee. Unless Powell were to say something astounding. So I'm going to wrap up the morning webcam. At this point, I'm just monitoring my MJ positions from earlier in the week. Wasn't able to do much today. A bit overwhelmed and certainly not going to force trades in that scenario. And as far as today goes, I'm going to be planting a fall garden. So I'll be back and forth in and out, but checking in every now and again. And at this point, the burden of proof is on the bears. If we do not break the low of today, the hourly uptrend remains in the S&P 500. So hope you all have a good rest of your morning. And a good Friday.